Hey, good evening, Micromap here, bringing you another YouTube longer video, not a short. I'll talk about the day and what I saw in the market today. Busy day, 55 trades, and a profitable day, over a K. I must say it was a good day. I didn't have to use my 8K. That's IQ for you OG rappers. Um, so the market rallied today because we got the Jolts report. These guys on if you guys don't follow these guys, they're on Twitter. They're pretty good. Zero Hedge, they're pretty good. They put up a lot of good information. Um, so basically, the market popped today because the Jolts report showed less. I will go to the TD news thing, but I don't think it goes far that back to this morning. It only goes back to 4:57 p.m. Um, so let's see how far back I can go here. I know they put some good news here. I like reading all their little articles. Pretty good, pretty good tweet to follow. I think they have like 1.7 followers, so that's pretty good. 9 hours ago. So let's see here. So let's see here. Sorry if you hear a lot of noise in the background. So this was the biggest 3-month drop in U.S. job openings on record, excluding the economic shutdown during COVID. So big drop in job openings. Um, Interest rates fell because the market thinks that this is green light for the Fed to stop raising rates or even start cutting rates eventually. Start the the uh, the, the decrease of interest rates. Sorry, I got stuck there. Also, besides that, we had consumer confidence. So here's the Jones job openings cratered to 8.8. Expectation was 9.5. Last revised massively lowered to 9.616 from 9.5. So hiring is slowing down and job openings are slowing down. Let me see if they have consumer confidence here. Uh, let's see here. Maybe it's over here in economic data. Let's see. Economy. You're gonna hear my daughter and my wife in the background bickering. My wife bought her sheets for her bed and didn't even think about the size of the bed. It's like me going to buy shoes and not even looking at the size. It's a full size bed. Where was I? Tomorrow we have the CPI report, very important report. So we can give it all back if that report comes out really hot because that means that the Fed's going to have to raise interest rates. So I think we're going to have a lot of gyrations in the market. Let me see. Let me just Google here. Consumer. It was consumer confidence. That was it. Consumer confidence report. U.S. consumer confidence wanes with prices still high and signs of cooling job market. So these two factors cause the market to rally. Bad news means the Fed has to drop interest rates and the party continues for Wall Street. Um, so let's close this. If you don't follow Zero Hedge, I would recommend it. Good little articles there. On the trade front, 41 fills here. In Tasty, I had 14 for a 55. These are all my positions here. As you can see, biggest winner is Carvana. I'm still holding it. My average price in Carvana stock is $21. It's at 47. United Rentals, Deckers, Deere, and the rest are pretty much options. These are all the green. The biggest loser is AYX, which I sold a call against it at 30, and I let them take it away. Not a big deal. Dollar Tree down, and Wingstop and SBSW. I need to find out what's wrong with SBSW. I don't know why they've gone down. Some of my hedges are down just to make my portfolio neutral, delta neutral. Here in the TD, did 41 trades today. And you can see all my winners. This is my P&L for the day on all these. Biggest losers were my hedges. 1,500, not counting my couple futures that I took off. Deltas, I'm long. Where are my deltas? Oh, right here, deltas. Long 46 deltas right now. So just a lot of spreads. Go through the orders. I did an iron fly. So you kind of get a feel. Let's sort these by spreads. It'll be a quick little tutorial on the kind of spreads that I do. I know I talk a lot about quick YouTube shorts, but so you get a feel for it. I did a lot of future trading. Future's pretty easy. I do the micros, and for example, this is a micro here. So if I wanted to trade it, all I do is go here, right? I just click. Make sure this color tab is yellow on your watch list here on the left, and your yellow here on the trade tab, right? So every time you click on a position, let's say NASDAQ, the chart will pop up here simultaneously. So here, sorry if I get my words wrong. It's been a long day. I'm tired. I'm just doing this quick YouTube short here, YouTube video. I got up really early. Long day, and I worked out. I don't know what I've done on the way from, but I've been getting better with the back. Thank God. So the S&P is up 4 right now. So basically, if I sold this, it's very easy. If I wanted to sell it, I just hit the bid, and this would cause a sell ticket. And if I sell it, that means I'm short. If I want to buy it, boom, it goes green, and that means I want to go up, go long. So in my case, if I wanted to, for example, going back when I talk about beta weighting a portfolio, if you go here, you see I have 46 deltas, 48 compared when I beta weight my portfolio to the S&P 500. You see right here, position statement, click. If I click here, it says not beta weighted. So now my deltas are probably in the cloud. Let's see, 1,200 deltas. But if I go over here and I click it and go to the SPY, right, it's 48. So if I want my portfolio to be neutral, meaning no exposure, right now if the market goes up, I'm supposed to make money here. But if I want to just neutralize my portfolio and go ride bike, let's say, and I'm worried, or go swimming, which I'm not, but let's say I did if I wanted to, all I would do is come here, right? And I know that this product right here, if I click sell, this right here gives me, so you right click here, analyze trade, and you can see right here that this product gives me, it says 5, but it's not 5, it's 50. It's thinking. Oh, I gotta go to the risk profile, sorry. Let me go down here. You see right here it says 5, right here in the corner. It's really 50. And that will bait away my portfolio if I were to sell that. Neutral. So those are futures. Futures are very easy. You buy, sell, it's 50-50, buy and sell. That's why I like options. They're more of a gray area. So let's go back into the different positions that I do. Okay? So let's talk about, I'm gonna tell you about rolling and how I keep credits and how I manage it. NEO, for example, my position went against me, and I like to sell stuff at 45 days is what the research Tasty Trade says is the sweet spot. And you manage these options at 21 days, right? So this one went against me completely, and I had About a little bit more than 21 days. Actually I had 17 days. So what I did was, it went against me. I think they had earnings today, so I rolled it out to October. And this is how this looks like. Let's go over here, account statement. Let's plug in Neo. Oh, sorry, Neo, right? So my initial position in Neo was this vertical right here. I highlighted it. I sold the 13.12 and I collected $37. I trade small. I do one lots. I don't do nothing more than that, right? It was the 13.12. The position went against me. Okay, so what did I do? This was September, expires in 17 days. It's kind of really underwater. Stocks at 11 bucks, 13. I want to give myself more time. So what I do, I collected another credit and I went a little bit wider. So what did I do? The 12 and 13, I got rid of them and I sold the 11 and I got the 8 for another 27, 20 cent credit. So right now I have 57 cent credit. $57 I've collected on Neo. Okay. Right now I'm up $18 and my margin requirement is 300. 11 minus 8, 3. $300. Hope you understand that. It's a $300 white spread. I have 57 cents credit. Now the goal here is to buy this back or let it expire before the 21 days, and that's how you manage it. The 57 cent, if the stock gets assigned to me, which it can, because anytime your stock is in your options in the money, which is the 11 put, you can get assigned the stock. That's fine. I own Neo at 100 shares at 11 bucks minus the 57 cent credits. 57 cent credit I collected. Let's say 50. So now I own Neo for $10.50. Hope you capture that process. Remember, one contract is 100 shares. So if I take possession of the 100 shares, hypothetically, I'm into it for like $1,000. Margin won't charge me that. So like I want to buy 100 shares right now, they're gonna take away 439. There's a ratio that they use. So I don't know exactly what the ratio is, but I don't go on. I really try not to go on margin. I stay away from that stuff. So that's where I'm at. So right now I know that I collected. So what I do is go create closing order. Right now I could buy this back for 96 cents, but I don't want to buy it for 96 cents. I sold it for, I have a 57 cent credit. So a profit for me would be at 25 cents or let it expire. So let's just expire worthless. But let's just say we close at 25 cents. Boom. And that order's sitting there for the next, I guess, to 21 days. Okay, so that's how you roll. That I'll do more videos on rolling. I did an earnings trade on Hewlett Packard. What did I do? So let's go to, I think this is better for illustration. Sorry if I'm shaking. I have restless leg syndrome, so I shake a lot. Nervous guy, I guess. All these digits and widgets. Okay, so you go to trade. Let's go to the curve. So they had earnings today, and I sold and it actually went down, so I'm going to keep this credit. 32 and a half. Very small. I didn't want to gamble a lot. And I think I collected 17 cents. I did collect 17 cents. So I collected 17 cents. So my profit here, I did 3 contracts on this one. So I'm going to collect $51. I'm going to make $51 on this trade. And this is how it looks. I sold the 32 and I bought the 32 and a half. And I think they closed down. HPQ closed at 27. Actually, let's see products. I don't even know what it closed at. The biz 27.88. Ask. Does it have a last? 31.37. I don't think that was a last trade. 28. So I should, that one worked out for me. That was an earnings trade. Okay, so verticals, you can do verticals, and these are verticals. You can do, they're basically put credit spreads. That's a vertical. That means you think it's going to go up. Or call credit spreads. That means you think it's going to go down. Remember, it's the opposite. I don't buy, I sell. So, for example, this was a bearish trade on. So NEO, I have a put credit spread. That's bullish. I have call credit spread in HPQ. That's bearish. I mean, go down. SMCI go down, right? And those are verticals. Let's see what other we can do here. Okay. So I did a couple iron condors, but I really did iron fly. Okay, so what is an iron fly? So basically, I went to big lots, and I made money in big lots, and I still put another trade on big lots today, after I made money, because the IV stayed up there. Big lots was one of my biggest winners today. Where is it? Oh, I made 145 on big lots today. Iron fly. So what is an iron fly? So I went out, so I picked iron condor, and I went out 52 days, right? When I look at big lots option chain at 52 days, they don't have weeklies, mind you. When I look at this graph and the options are inflated, so obviously the stock went up 26%, so the 750 calls went up. Obviously the 750 puts went down, but puts always trade higher than calls for the most part. Put credit spreads trade cheap, call credit spreads trade rich. What I did was I sold the 750 put and call. That's a straddle, but we're gonna design it here and we're gonna protect ourselves. So what I did here, boom, boom. I bought the two. Let's see what I did here, and this was for buying power reduction and protection as well. So I bought the 5 right here. So I sold these two, bring this in, brought the 5, and I sold the 250, and I did it for $1.75 credit, $175 credit. You could maybe do it better than me right now. You could do it at 178, maybe even higher. Now, what is the goal of this position? The goal of this position is for me to buy back this spread at a 25% profit. So basically, I have an order in to buy this spread that I sold for $1.75 for $1.25. So $1.75 minus $1.25 minus resort fees, which could be a couple bucks, is $50 on $175. So 25%, and that's an iron fly. The more you watch, I'll do more videos and stuff. But the more you watch, the more you'll grasp the concept. And I always recommend that you watch Tasty Trade and Tasty Works and TD Network. They have great programming during the day. So a lot of vertical. Everything consists of basically verticals. It's just different names. Here's a broken wing butterfly I did in Airbnb. They were up pretty big today, so Airbnb. So we're gonna go over here. We're gonna call long call butterfly, right? And I think I did it for next week, 10 days, right? So what did I do? This is a regular one. This is a debit. I don't want to pay for options. I like to sell them. So this is a regular butterfly. So how do you make it a broken wing butterfly? I'm obviously gonna move up my strikes, and I think I sold the 138. So I bought the 138, sold the 139, and I skipped all the way to the 142, and I think I collected $18. You can collect 20 if you didn't know. Wow. My probability of profit here is not that good. It's only 52%. Should have probably done this a little bit further out. But I took more risk on, but I collected a bigger credit. If you go a little bit further out, you get less credit, but you get a better probability of profit. I might have done it too early, so I don't know how this trade will pan out, but I hope you get the concept. Here you can get 66 probability of profit, and you get 10-cent credit. So you're getting paid to put the trade on, and there's multiple ways you can make money here. So it's not only that you get $10 to put this trade on credited, but if Airbnb were to go up to your short strikes, which are the 142s, you hypothetically can make, it's kind of covering the profit analysis here with these things. How can I do this so you can see it? Okay. It's not letting you see it. Well, it's right here. It's right here, down here. I kind of move this. Okay. So your max profit's 110. And if it don't go up to your short strikes, you keep the credit. So that's a broken wing butterfly right there, folks. I do a lot of broken wing butterflies. I do put credit spreads, call credit spreads, which are selling options. I do broken wing butterflies. I do iron condors, iron flies. I do futures to beta weight and scalp. It's more like a day trading inter day trade kind of deal. And I really don't buy. If I buy options, I'll buy in the money and then sell one out of the money. I'll do that, which is called a call or put debit spread because you're paying for it. I'll do that. Or I like calendar spreads, and I'll get into that in another video because I didn't do any of those today. Um, I don't like those. Because I like to collect credits. But anyways, this video getting a little bit long, but I want to get a little bit more articulate and get a little bit more in detail on what I do out in the marketplace. Tomorrow we have the CPI in the morning, and that should be market moving. I think if it comes out a little hot, comes out at 8 a.m. it says here, I think, or is it Wednesday? I think it's tomorrow. Not sure, but I'm pretty sure it's tomorrow. Economy, I think they talked about CPI. We'll see. Let me see. Let's Google it just to be sure. Next CPI report. September 13th? No. Let's see here. I could have sworn that we had a report tomorrow. It says here CPI in the calendar, but 8 a.m. seems kind of early. It says here, consumer price index is a measure of average price level of fixed basket of goods and services purchased by consumers. I think it's tomorrow. We'll see. And then we got it says here, jobless claims, Chicago PMI. So we got some news, and we got unemployment, PPI. So we got some more news this week. We'll see if we get some gyrations in the market. Anyways, stay safe. Have a good night. Subscribe, like the channel, and I'll see you in the next video. And if you have any, obviously invest in your own risk. And if you have any doubts or questions on options or trading or some of the Greeks, chime in. Be happy to help you. Take care. Have a good night, folks. Bye-bye.